Trading. Let's review my pre-market trades. Took a few positions this morning. I think it is best to wait for volume that comes, or it's been shown that volume improves the accuracy of this system. So trading with this system with the most volume, I would say would potentially increase the probabilities of success. So first I'll break down my charts. Here we have candlesticks. This is a volume profile. This is a slow stochastic, and down here this is MACD. This blue line that you see here, this is the 200 EMA. And these purple lines that you're seeing, these are Camarilla pivot points. So this is R4 and this is R3. The three positions that I have on are all R3 to S3 traverses here. And then you'll see here on the daily chart, this is the 15-minute. This is the chart. And we'll zoom in on the daily, and I'll give you where my trade idea is coming from. So the way that I gauge strength or weakness in a currency pair is using this 200 EMA on the daily. I also get my trading levels as far as in my profit targets from this daily level using the previous day high, low, and close. So that's where you get your Camarilla pivot point numbers from the previous day high, low, and close. So if they're not already programmed in your trading platform, there are some places online where you can put in the numbers from the day before, and they'll give you your pivot points, or unless you're able to do the calculation yourself. So we can see here that AAVE is trading below this 200 EMA. So I'm going to have a short bias towards this particular currency pair, and we'll move up to the 15-minute, and I'll show you what got me interested in taking this trade here in the pre-market of the US Open. So here we have R3. You can see it now, but the bid line is resting right on the pivot point right now, so it's covering it up. But when it moves up or down, you'll see the purple show back up here. But this is R3. So I see when we come into R3, I'm noticing this increased volume profile as we make contact here, as buyers drive the price into R3. Seeing these three dojis right here, these three indecision candles, we're in an overbought position here on the slow stochastic with the slow D up here, and the MACD is over the average. So what I'm seeing here is with the increased volume here, that there may be a resistance level here at R3. Buyers were able to drive the price over R3 in this candle here. This is a Fibonacci retracement. I'll use these to gain a better entry on pullback. But this was what I saw that got me interested in taking the trade pre-market. Mostly this volume profile here at the Camarilla pivot. So seeing volume in an area where I would like to take a trade is usually for me for a signal of this may be a good trade to take. Preferably I'd like to wait for the open, but an opportunity to get a better entry, I couldn't resist this morning. So with the things that I'm working on, trying to pay better attention to volume profiles and take advantage of opportunities when they present themselves. So with this, that's why I decided to go in and take this position on AAVE. We'll go next to Filecoin. Filecoin, similar situation, but a little bit different. We'll come in here on the daily chart. We can see here Filecoin is trading well below this 200 EMA here. So I was interested only in going short on this particular currency pair. So we zoom out here on the 15-minute. We can see here, up here, this purple line up here, this is R4. And right here, we're at R3. So here we have, I notice this particular volume spike. It's not the biggest volume spike in the world, but here being overbought and having the MACD above the average and seeing the buyers having some momentum. Also, you're seeing here the MACD close below the average. It crosses over, and we can see here the slow stochastic here crosses over as well. So I'm seeing signs of weakness when I see this, and seeing this volume spike correlate with this candle right here, that buyers drive the price into the R4 level. My trade idea was that this will fail at R4, and price action will sell off to R3 and potentially R3 to an S3. So this would be an R4 to an S3 traverse if it works out. I did not get the best entry. We get some, I'll zoom in here. Did not get the best entry. So here, while it was breaking down, I took an entry. Actually, I may take another entry. I may want to cut this position off and take another entry just to get a better price. If I lose, then I'll lose a trade and a half, or 1 R and a half. If the trade works out, the money that I lost, I'll get back on. I'll make the difference back from getting the better price. Let's see what we're looking at on Fibonacci retracement. This actually looks pretty good as far as in taking another entry here. Let's see. We got 8, so 2851. Do my stop and profit target. This trade may fail, but getting a better entry here would make a big difference in price. Where we at? File 270. So we're right. We might get stopped out, but the stop will be so tight. We'll go for it. All right. And now I want to cut this other position here. So we got in at 284. close this position. So trying to keep my positions to one position right now, instead of like adding or having multiple positions, just trying to equalize risk, and I'll allow myself to cut a trade in order to get a better entry, like I was here. So if I get stopped out, it's going to be so tight that I'll hardly feel it. But if it works out, then I got a really good entry. So right now I like this entry based on the Fibonacci levels. I got in probably at the 1 or at the 7 point, whatever it is, level that's up there. So yeah, I like this entry a lot better on Filecoin, and we'll see if it holds. If it doesn't hold, then it'll be a very, very minimal loss here. So now we'll move over to Near Protocol. I'll tell you what I saw on it. So here on Near Protocol, we can see here on the daily, we're trading well below this 200 EMA, so I'm going to have a short bias on this particular currency pair. And then what got my attention looking at Near Protocol was this volume profile here. While it was in an oversold area here. Also we have the MACD trading below the average, sellers in control, and we can see that this volume produces very large candles here, some indecision dojis here, and then we can see the price action, buyers pushing the price up into R3. This is R4 here, and this is R3 here. And then again, we're seeing an elevated volume profile. Here we're in overbought conditions, and we're seeing the MACD above the average, and we're seeing these crossovers here. And this volume correlates with the price action being driven up above R4, which would typically signal along. But looking at the price action, there's some consolidation here. We get these big candles, but these candles cancel each other out. So we have this large buying candle here, followed by a large selling candle. Same thing here. So it's basically large candles, a lot of volume, but consolidation. And we can see here it sold off below R4 here. So ideally, if I would have seen it around here, this would be an ideal place to take an entry, or actually no. Based on the Camarilla pivot system, you want to take an entry here at R4 at the highest. Also, you can take them here in between R4 and R3. Also, you can take them right here at R3. So my entry is this midpoint right in here. So preferably I can catch a trade at the volume spike area. If not, then I want to catch it when volume declines afterwards. And we'll zoom in a bit and I'll show you exactly what I was seeing. So when I see this wick right here, this indecision doji, and I'm thinking this may potentially turn into an isolated pivot high, with this being the high right here. So I take an entry right here because I don't believe I'm going to get any viable pullback this close to my stop loss. And also this is that mid-level that I was talking about, and where ideal locations on where you want to enter a trade of this type, either an R4 or R3 traverse here to S3. So you can, based on this stop up here, you could have taken it in this area, also taking it anywhere in this area here, and then lastly, if it sells below here, you can catch it here. But this is what I was seeing. So this morning, trying to pay better attention to my volume profiles on these currency pairs, and trying to do a better job of spotting trade opportunities based on that volume profile. I noticed that trading the open or trading the U.S. market hours are more ideal for me and my trading system, since volume is beneficial to it working. So just looking for the signs and symptoms of what's needed in order to be more successful. Also, looking at my P&L, yesterday I was up quite a bit, probably up to about $150, but trying to work on how I want to manage my trades. Preferably, I want to enter a position and then just let it go. If it works out, it works out. If it doesn't work out, it doesn't work out, which I think is a decent approach. And I understand like trying to stop out or protect profits when things start to turn around or look like they may reverse is common. Just trying to get to a place where I make a rule and a consistent decision on how I manage things after the trade is entered. So my plan right now is I'm just going to enter. I'll keep my stops in place. I'll keep everything as is. Trading pre-market, pre-US market open like I'm doing now. We'll see how it goes. I think if I make better selections, then it's possible it could be a better idea. And I feel like my currency pair selection has been improving since making some changes with my charts. But at the close of the US market, the volume really drops off, maybe until the open of the crypto market, which is, what is that, 4 hours after the US market close. In those 4 hours, I notice things usually go a different way than how they were going during the U.S. market open, or during the U.S. Market hours. So my plan right now is to make a tentative rule that I can trade pre-market if there's volume profile. If not, I wait for the U.S. open and then wait for volume there. And then at the close of the U.S. market, I'm just going to close out all of my positions. If anything runs, to the profit targets or this or that, that's great. I'm going to let it go. Looking at the averages and also looking at my P&L, I don't think that it's going to be worth it to hold for target once the volume dies off, because market makers can more easily move price where they need to move it and are likely setting up for the next day. But we'll see how that goes. But being up quite a bit and then just being down. But if I would have just closed my position, and also looking at the consistency part, as in if I consistently do this, based on the rough numbers that I've done from the past couple of weeks, I'd be more profitable on average if I just cut my positions at the U.S. Market close instead of letting them run. A few of them have gone to target and would have been huge winners, but maybe it's 10% of them that maybe go to target after the close. The other 90% fail and then draw down on your profits. So I just don't think that it's worth it for me right now, but I want to look at closing out all of my positions at the close of the U.S. market and get a feel for how my P&L is looking then. And then if the ones that want to make the move, from a psychology point of view, let them make the move. But if they didn't make the move in the time frame, just like if they don't set up the way that I like them to set up, don't trade them. So if they don't go in the time frame that I'm trading in, then I let them go. But we'll see how it all goes. This is on Tilt Trading, and we'll